Welcome back to our channel, where we break down the complex world of taxes into bite-sized, understandable pieces. Today, we're tackling a question that many Airbnb hosts might be wondering about. Do you owe self-employment tax on the income you earn from renting out your property? Let's dive into this important topic and see what the IRS has to say. To answer this question, we'll refer to a recent advisory opinion from the IRS known as Chief Counsel Advice 2020-105. Now, before we get into the nitty-gritty details, it's crucial to understand that while this advice provides insight, it cannot be cited as a legal precedent. However, it does give us a valuable perspective on how the IRS might handle situations like yours. Let's start by setting the stage with the specific question addressed in this advisory. The IRS was asked whether the net income from renting out living quarters, like an Airbnb, is excluded from self-employment income under Section 102A1 of the Internal Revenue Code. This exclusion is particularly important because if your income qualifies, you won't owe self-employment tax on it. In this advisory opinion, the IRS looked at two specific scenarios. Let's break them down one by one. First, imagine you own a beautiful beachfront vacation property that you rent out through an online marketplace like Airbnb. You're not classified as a real estate dealer, but you offer a wide range of services to your guests. These services include things like daily maid service, Wi-Fi, beach access, and even recreational equipment like kayaks and bicycles. In this scenario, the IRS determined that the net income you earn from this rental is subject to self-employment tax. Why? Because the services you provide go beyond what's necessary to maintain the property in a condition suitable for rental. According to the IRS, these services are considered substantial, and that's the key word here. They aren't just about maintaining the property. They're enhancing the experience in a way that significantly adds value, which means that portion of your income is subject to self-employment tax. Now, let's look at a different situation. Suppose you rent out a bedroom and bathroom within your home, also through Airbnb or a similar platform. Your guests have limited access to the common areas of your home, using them only to enter and exit the rented space. You take care of cleaning the room and bathroom between guests, but you don't offer any additional services like meals, transportation, or recreational amenities. In this scenario, the IRS concluded that your net rental income is not subject to self-employment tax. Why? Because the services you provide are considered minimal and are primarily for maintaining the rental space, not for enhancing the guest experience beyond what's expected. So what does this mean for you? The determining factor in whether you owe self-employment tax on your Airbnb income boils down to the level and nature of the services you provide to your guests. If you're only maintaining the property, cleaning, providing basic utilities, etc., you're likely in the clear. But if you're offering substantial services that enhance the guest experience, think daily maid service, transportation, or other amenities, you may be on the hook for self-employment tax. Now, you might be wondering, what if you own a luxury vacation property where guests expect a higher level of service? The IRS regulations state that services are generally considered above and beyond, only if they exceed what's customary for the type of rental property. In high-end resort areas, for example, many services like cable TV, Wi-Fi, or even housekeeping might be considered standard and thus might not trigger self-employment tax. However, if you go beyond what's typical for your area or market, you could still be subject to this tax. An interesting point to note is that even if you are providing services that could be considered above and beyond, the IRS also looks at the substantiality of these services relative to the overall rental income. In cases where the rental charges are very high, the portion of income attributed to these services may be considered insubstantial, and thus, you might avoid the self-employment tax. The key here is to understand both the nature and extent of the services you're providing. To sum it up, here are the key takeaways from today's discussion. 1. Understand the level of services provided. If you're simply maintaining the rental, you likely won't owe self-employment tax. 1. But if you're enhancing the experience, that's a different story. 2. Know what's customary. In high-end markets, what's considered above and beyond might be different from more standard rental markets. What? Consider the substantiality. Even if you provide extra services, they need to be substantial enough in relation to your overall rental income to trigger self-employment tax. Thanks for watching. I hope this video helps clarify whether or not you owe self-employment tax on your Airbnb rental income. If you found this information useful, don't forget to like, share, and subscribe for more tax tips and financial insights. And as always, if you have any questions, leave them in the comments below, and we'll do our best to help you out. Until next time, keep your finances in check and your rentals booked.